Now we have dispatched the order. We have done our own part. We've done a lot of work as a company. We've dispatched orders to the customers. The next thing is to earn our money. Then we can now sit down and raise our invoice, which is asking the customer to pay us. Remember, we have received the order, we have processed the order, we've dispatched. It's time to now raise our invoice. And you're wondering, what can go wrong again? Yes, there are a lot that can go wrong. The first that can go wrong is we can forget to raise invoice. So invoice is not raised. No, it's not raised. And our control will be to ensure that invoice is raised for every dispatch. For every dispatch. That's it. We don't want to leave our money away. So how do you design a control that will ensure that invoice is raised for every dispatch? I will never forget to raise invoice for any dispatch. All we need to do is to ensure that we send a copy of that good delivery note. Remember, invoice is the only way to collect our money. Good delivery notes will not be a document anybody will use to pay us. So that means we need to tell finance that we have sold something every time we sell. And we must make sure that our invoice are all sequentially numbered and attached to every GDN that is meant to be paid for. GDN is evidence that we have sold. Invoice is the way to collect our money. So the two documents must be attached together. So what you need to do as a control is to ensure that you send a copy of GDN to finance, because that is how finance will know that they need to raise invoice for what we have sold. Yeah, so send a copy of GDN to finance. Then finance, I'm calling it FN. Finance raises invoice and attach it to the relevant GDN. And most importantly, invoice must be sequentially numbered, always. I told you, anytime you are talking about missing out something, think about sequential numbering. It's very important. Yeah, because if I'm seeing invoice that is jumping numbers, I'm asking questions. If I'm seeing GDN that are jumping numbers, there's a problem. So what auditors need to do is to obtain invoice, ensure and obtain the invoice and ensure it is attached to GDN, and both documents are sequential number. Are sequentially numbered. Period. And that's it for that risk. But that is not the only thing that can go wrong when we're trying to raise invoice. That is surely not the only thing that can go wrong. We can also raise a wrong amount. We can make mistake. Instead of 30,000, we can put 3,000. So we can make mistake. So which means there might be error in invoice amount. There is no other risk in revenue that I'm not covering here. So if you understand everything I'm teaching you here, you are home and dry with revenue. Revenue process is one of the commonest questions you can have in exam. That's why I'm taking my time to break it down properly for you. So What will be our control to ensure invoice has correct amount? To ensure that invoice has correct details. And the best thing to do this is use automated control for the matching. And what do you need to do? You can also do manual check though, but it's always advisable to use a system check when you're talking of figures. So what the control that would design for this kind of risk is a system control. Yeah, that matches invoice and GDN amount. GDN and invoice. So what happens? Reject unmatched. So by the time you reject unmatched invoices, you can investigate and see what is going on. And with that, you can easily correct and avoid mistake. Yeah, so auditors can just, it's automated control. So auditors can check that the system is working the way it should work. That's all. This system control, all you need to do is just test one. Because if the system is good for one, it will be good for 1 million. It will be good for ever, right? So test the system operation. Yeah, you can do a simulation. Simulate wrong matching and see whether the system will actually reject it or not. And that is it with raising of invoice and what could go wrong with invoice and how to design control for such. The next thing is we have earned revenue and we need to record sales. Now financial statement is impacted because now we're going to be talking about GL posting. What is the point? We have sold, we have raised invoice, but we did not record it in our GL. It's nothing. So what could go wrong is that all sales might not be recorded. You might miss out some. That is a risk and happens a lot. And our control will be to ensure all sales are recorded in GL. In our general ledger. Yeah. What is the control to be sure that we're able to do this? Easy. Perform account reconciliation. That's all you need to do. But what type of account reconciliation are we talking about? You need to perform GL reconciliation. Because when you do reconciliation, it will show whether something is missing or whether there is any payment without account receivable book in the account. So let me usually the account we're talking about is debtors account receivable. Imagine when a customer pays, we'll normally say you debit cash and credit AR. Because you expect that AR must have a debit balance before. But if a sale has been omitted and that customer doesn't have a debit in his AR, it means that sales revenue also will have been omitted. Because normally this is what you should have been posted, right? Credit revenue, debit AR. So if you post this when payment comes in and this does not clear out any debit, which means the customer account now becomes a credit balance, then that will tell you that you must have missed this posting. And in that case, reconciliation is helping you to make that correction. So debtors reconciliation is very important. And what auditors just need to do is to obtain sample reconciliations, and doing reconciliation is not enough. It is even more important to clear the items promptly. So you're not only checking that they've done reconciliation, but you need to also check. So obtain sample reconciliation and check that open items, which are the issues. The open items are closed promptly. Closed means they are resolved. And that is how you deal with omission of sales item. Reconciliation is the way. But that is not the only problem you can have. I know you're wondering, why is this process so bad? And that is why the examiners also like this revenue process, because there's a lot to understand. Very important. What about if the amount is wrong this time around? So, which means amount recorded might be wrong. So instead of invoice is saying 20,000, whereas we posted 15,500. That is wrong. So our control is to ensure, that's our objective. We want to ensure that sale amount is accurately recorded. To ensure that sale amount is accurately recorded and in the right customer. Because don't post sale of Mr. B into Mr. A. So in the right customer account is also very important. So amount recorded might be wrong or customer might be wrong. Let me add that. Not just amount. Customer also might be wrong. So it's very important. So the control is that a supervisor must be involved. A review must take place. So supervisor review sale posting. And what is it doing? It's checking that all these things are correct. Review sale posting with invoice before approval. So that when we come to audit, what we are looking for is the approval. So that is our test procedure. Obtain evidence of approval, because once we see evidence of approval, then we know that this review has taken place. If it's manual, you see signature, and if it's on system, you see the audit trail. Audit trail means you will see the name of the person that approved. So it's like an evidence. And that is what could go wrong with recording of sales. What is the last stage? So we've raised invoice, we've posted the entries. Now the last stage is cash receipt. I'll post the entries for cash receipt as well. So the last stage we're looking at now is cash receipt, which means we'll receive money, which is our final objective. The most important thing that can go wrong here, I'm sure it's you are screaming it, is that customer will not pay. So customer does not pay us. What's our objective? The control objective is to ensure that customers not just pay, but they pay our invoice promptly. So they pay promptly. We don't want too much delay. And what's our process? Control that will ensure that happens is that we chase our old debt promptly. How do we know that some debts are owed? It means that we need to prepare aging analysis. So we need to have age analysis. So which means we must always prepare AR, which is account receivable age analysis. When we prepare that, we'll now see some customers have been owing for some long. So then we can chase old debtors. So any debt that is old, we chase it. That is our control. Then the test is to obtain evidence of that chase. So give me the email you send to customers where you are asking them to pay on time. So we need to obtain evidence of follow-up on debtors. That's what auditors need. And that is it for that particular risk. Still on cash receipt. Yeah, the first one is that they might not pay us, but also they might not pay us the right amount, either error or deliberate. I don't care, but the question is you are not paying the right amount. So they might not pay the right amount. Customer may not pay the right amount. Control is to ensure they pay the right amount. So they ensure customer pay the right amount. Yeah, and what will be our control? Control is just the same as reconciliation above. Must perform debtors reconciliation. Because at that point, remember the entries. When we sold, we have debited AR with the right amount and credited our revenue. When the customer pay, we will credit AR and debit cash. So this must come to zero. If it doesn't come to zero, something is missing because it should be the same amount. That's why debtors reconciliation is going to help us there. Yeah, and auditors just need to obtain samples of those reconciliation and ensure that, similar here, this exact one, open items are closed promptly. So obtain sample reconciliation statement and prompt clearance of issues. It's the same thing as above. Just put in a different word so that I don't know which one you like, what word works best for you. Pick your right word, but understand it. Yeah. There's also more that can go wrong because when we receive cash, we need to record it, right? So cash received might not be recorded. There are several reasons why it might not be recorded, ladies and gentlemen. Unfortunately, you might have funny people in your company that are stealing the money. So the fact that the customer has paid or that the customer has not paid, yes, is a problem. Or the customer has not paid the amount is a problem. But what about when the customer has paid and has even paid the right amount? However, it has not been recorded. Yes, so cash might not be recorded. So cash received. And can actually be a mistake. Yeah, it's not everything that is fraud. So cash received might not be recorded. Yeah. Or wrong amount can be recorded. That's another one. Wrong amount can be recorded. That can also go wrong. Yeah. Wrong amount can be recorded. Or amount recorded is recorded in wrong customer's account. So, or cash is recorded in wrong customer's account. Customer A is paying, but you are posting that payment in customer B account. That is a problem. So those are the things that can go wrong, right? And you already know what our control objective would be. Yeah, this one is to ensure I will have left this for you, but let me complete it quickly. It's easy. We are done now. To ensure that all cash receipts are recorded. Yeah, that's the objective. This one is to ensure the right amount is recorded. Don't steal part of it. And this one is to ensure that cash is recorded in the right customer's account. Cash is recorded in the right customer's account. Like I said, try and take a plain sheet and do this table all by yourself and try and be seeing how much you can remember. But remember, break it down into sub-processes like I have done. It will help you. And what will be the controls? Yeah, for this first one, cash received might not be recorded. If we forget to record cash receipt, remember the entries. Cash receipt will be this entry: credit account receivable and debit cash. However, if we don't receive cash, we won't be able to post that entry. So which means if we send customers, which is the control, customer statement, we'll be telling that customer that is owing us, and is going to scream out and say, I am not owing you, I have paid. And that will expose us that we have forgotten to record that cash. So send customer statement is a control for that. And all auditors needs to do is to obtain sample of customer statement sent. Yeah. Even if we don't record the correct amount as well, customer statements will help us because we'll be telling customer is owing a wrong amount. You can see how important customer statement is. Likewise, another one that can help us is the customer account reconciliation, which we will do in-house, the AR reconciliation that I spoke about before. Will also help us there. Any of them will help us. Likewise, if we record in a wrong customer's account, customer statement will expose. So we send customer statement and also customer account reconciliation will expose this risk. That's the control. Yeah. And for all of that, anytime you see reconciliation, the procedure is the same. Yeah. All we need to do is to obtain sample of reconciliation statement and not just that, ensure the controversial issues are promptly resolved. Controversial issues and your open items are the issues you have. And ladies and gentlemen, that is it with revenue process.